Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 256 of our YouTube channel and podcast, and I cannot be more excited to continue sharing with you guys personal finance topics that I think could be useful for you in your long-term financial journey. Today we are going to be talking about how cryptocurrency may measure up to traditional stocks, bonds, and investments of the like. Because we know over the past year or so, year and a half, whatever, there's been this big move in cryptocurrency, both on the upside and the downside. And I think it's important for us to understand what part cryptocurrency should play in our portfolios. And we need to understand a little better the stock market and understand how we can build wealth in that place, because we don't need to be foregoing the traditional investments that will get people to long-term wealth for the short-term investments, the investments that seem to be making a lot of sense, or the speculation that seems to be making a lot of sense in the short term. So stick around for all that and more of a discussion about cryptocurrency in today's episode. Before we get started though, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, building a financial plan, building financial goals for you and your family, and then helping you to push towards those goals and ultimately the goal of long-term financial freedom. So I ran across an article on Friday of last week, and I thought that it was particularly interesting. I go through CNBC just about every single day and try to find articles that are interesting, try to find premises that are interesting, and things that are relevant to our day-to-day lives and our investing and our personal finances and things like that. Well, this headline kind of got me, and I read a little further, and I thought it was worth our discussion. So there's this article written by Nicholas Vega, and it says, women and investors of color seem to prefer cryptocurrency over traditional stocks. Here's why. Okay, and so just right off the top, that headline got me, right? That headline made me begin to think. Why would women and investors of color seem to prefer cryptocurrency? Why would that be something that they were more interested in than traditional stock market, bond market, mutual funds, ETFs, things of the like? Why would that be something that they are drawn to? And so I went ahead and read through the article, and I'm going to read through the article with you today and give you my commentary as I go, because I think there is this big misunderstanding of cryptocurrency. I think that people believe that cryptocurrency is this investment that, okay, we understand what it is, we understand how it works, we're going to put everything that we have into it. You see all these professional athletes getting paid in Bitcoin, paid in cryptocurrency. They want all their marketing money. Saquon Barkley, the running back for the Giants, came out either last week or week before saying that he's going to get all of his marketing money in Bitcoin. And I don't think that's a great idea. And that's, many-fold why I don't think that's a great idea. But I don't think that's a great idea. And I also don't think it's investing. I don't think it meets our definition of what investing is. I think it is taking a very large amount of risk for an unnecessary reason. And I think it also has a lot to do with the fact that Bitcoin has had the run up that it has in price. Because you can't tell me if Bitcoin had been just up, let's say, the same amount that the stock market was up over the past 12 or 18 months, whatever, that so many people would be so gung-ho to put all their money into it. That just, there's no way, right? There's no way that everybody, let's say, Tesla stock being up as much as it has been over the past, 18, 24 months, that anybody would just say, hey, let me put all of my money into Tesla stock. No, but Bitcoin has been crazy. Cryptocurrency has been crazy over the last 12 to 18 months. And so I think it entices a lot of people in the short term to want to put money into something that has had such a good positive run. It entices people to do things that are riskier because there could be a good long-term reward. And I'm not saying that there can't be a long-term reward. I'm just saying that this is not investing. right? What is investing then? If we're saying that this is not investing, then what do we define investing as? I've defined it on this show the same way from the beginning, and I will continue to in the way that Graham and Dodd did in Security Analysis, the book that they wrote back in 1934, right? And it's that an investment operation is one that upon thorough analysis promises safety of principal and an adequate return. Okay. And I've talked before about why Bitcoin or Ethereum or any other cryptocurrency does not meet that definition. There's three parts to that, right? Thorough analysis, there is safety of principal, and an adequate return. Okay. Promising an adequate return, promising safety of principal, and requiring your thorough analysis. Now, anything can become speculative if you do not do your thorough analysis, right? If you do not thoroughly analyze anything that you're trying to put your money into, then it can quickly become something that is speculative, because there may be, a stock that's a good stock to own. A lot of people own Apple, right? Apple's a large company. It's grown at a good clip over time, seems to be relatively stable at this point, right? But a lot of people put their money into it blindly without understanding where Apple's revenues come from, what their growth drivers may be, all these different things, right? And understanding the fundamentals underneath Apple stock. Okay, so they don't do the thorough analysis. So that's just speculation already, right? Well, what kind of analysis are people doing on cryptocurrency? Now, some people are doing a lot of technical analysis with crypto, and I'm not going to discount that. There are people that are doing analysis on cryptocurrency, right? But I'm talking about the average individual. I'm talking about you and me, right? Are they doing any work? Are we doing any work to see what's going on in cryptocurrency? I would say far and away, no. All we're saying is, it's gone up a lot in price. We kind of understand what it is. Let's put money into it, right? That's what a lot of people are doing. And that is speculation. And I've told you before, I have money in Bitcoin, money in Ethereum. It is speculation, right? It is some amount of money that I should be willing to lose over time. It's not something that we're just saying, hey, this is an investment. I'm doing the thorough analysis, right? And there's a promise of safety. There is no promise of safety of principal. There is no way that you can be sure that Bitcoin's not going to be worth zero tomorrow. And if you're okay with that, then speculating is all right. Okay, but we shouldn't be putting all our money towards speculation. The vast majority of the money that we want to grow for ourselves into the future should be money that is put into things like the stock market, mutual funds, ETFs, right? Things that are going to go up in value over time in a real way. Now, I'm not saying you can't make real money off of cryptocurrency. Obviously, people have, and people will likely continue to make real money off of cryptocurrency. But what I'm saying is that there is only a basis of supply and demand for cryptocurrency. There is no reasoning that cryptocurrency should go up or go down other than the way that people feel and the way that people behave about that particular cryptocurrency. For instance, the same does go for the stock market and any particular stocks or mutual funds, ETFs, whatever, right? But if a particular company is doing well, then their stock price is going to show that they are doing well. Their stock price is going to be indicative of the fact that they are performing in a particular way, because if individuals don't flock to their stock because they have done so well, the insiders in the company will buy the stock. The company itself will buy the stock and give them some type of valuation that is reasonable to what they are actually worth in the market based on market fundamentals. Okay, so this is not the case in cryptocurrency. It's not the case in things like gold or other commodities, right? It is totally based on supply and demand. Okay, and things that are typically based on just supply and demand, there's not a real way that we can fundamentally analyze them to a point where we know that we are investing and not just doing some form of speculation, whether it's wild speculation or some very targeted speculation. Okay, so I do believe it's speculation. I believe that it's speculative because most of us don't do analysis, right? There is no true safety of principle. Now, has it given us an adequate rate of return? Yeah, it's given us an adequate rate of return, but should it? Right? Who's to say it should give an adequate rate of return? Who's to say that it should provide returns for us into the future? Okay, so that's something, again, that has to be a determination of being speculative or being an investment vehicle. Okay, so I don't think it's an investment vehicle in the first place. But again, qualifying this with the fact that I do own some, it's just the fact that I own some with the speculative portion of my portfolio, okay, which I tell you guys should be no more than 5 to 10% of your portfolio, and it shouldn't come until you've already built some traditional investments up that you believe can grow reliably over the long term. Because in truth, Bitcoin is only 10 years old. And I know that some may say, well, this stock's only 10, this company's only 10 years old and you invest in the stock or whatever, right? But the vast majority of companies that I invest in are through mutual funds, ETFs, things like that via the S&P 500. How long's the S&P 500 been around? 150 years plus, right? So this is something that has a good long-term track record, right? And 10 years is not a true long-term track record. All right. And if a company has been around for 10 years, I can fundamentally analyze a company to determine if I want to invest in that company or not. Okay. But cryptocurrency, like I've told you, is almost impossible to do that. And if you try to do it through a technical basis, then you are in the minority, not the majority, because the majority of individuals are just buying it blindly. So let's get into this article a bit. Again, women and investors of color seem to prefer cryptocurrency over traditional stocks, and here's why. So it says women and investors of color seem to be drawn to cryptocurrencies over traditional stocks, a new survey from NORC at the University of Chicago finds. The survey, which was conducted in late June and comprised of a nationally representative sample of 1,004 adults nationwide, finds that 41% of women and 44% investors of color say that they bought and sold crypto over the last year, compared to 38% of women and 35% of investors of color saying the same about stocks. Okay, so the women and investors of color that were surveyed, they tended to trade crypto more often than they were to trade traditional stocks. Now, this is a big shift. This is a big change in thinking that's going on in the market. And in my opinion, it's something that should not hold true. Right? Something that should not continue over a long period of time. Obviously, people are going to flock to something that's making outstanding rates of return. That's just going to be the case. So it's no surprise that people are flocking to crypto. But I'm also curious as to what about men and what about white men, right? Because that's the only demographic here that is not represented by those statistics I just gave, right? They said 41% of women and then 44% investors of color, right? So what about men and white men? Are they trading crypto more than traditional stocks? And if that's the case, then the entire universe of individuals are doing so. Okay, and then that would not be too surprising simply just because of the run up in price. But the reason that this is problematic, the reason that this is an issue, is that, again, cryptocurrency is not something that is proven. It's not something that you can fundamentally analyze, or that most people fundamentally analyze, right? Therefore, that means there's a lot more speculation occurring in markets than there is fundamental analysis of investments and then investing based on that analysis. Okay. Then it says the gap is a result of the perceived barriers to getting involved in both, with crypto appealing to the unrepresented groups because it's viewed as a more accessible of the two, the NORC's team believes. And it says, because crypto and digital assets are essentially new for everyone, there's not these complex terms the way that traditional stock investing has. Angela Fontes, a vice president in economics, justice, and social departments at NORC, tells CNBC Make It. There's this whole world of information about the stock market and how to trade and what stocks to trade, and that's full of terminology that first you need to learn to understand. Right? Whereas in crypto, there's a lot more information at the basic level because it's not at the same maturity as traditional stock investing is. Okay, so part of me understands the argument. Part of me understands the argument that there is a lot of terminology. There's a lot of accounting terminology. There's a lot of financial words that if you're not used to, then it's going to be very difficult to understand how to analyze a company, how to understand what you're investing in. But then again, on the other hand, they made the argument basically that crypto is very simple, right? That it's a simple thing to understand. And I've heard more people in the past year try to understand and articulate what cryptocurrency is and how it works to no avail, right? To not get people on board ultimately because they do such a cruddy job of explaining what it is, right? So if we're talking about explaining what stocks are, then I can explain what a stock is a whole lot easier than I can explain what Bitcoin or Ethereum or other cryptocurrencies are, right? A stock is just a piece of ownership in a company. You buy a piece of stock, then you have a right to the assets and the profits of that particular company because you are a partial owner. When it comes to Bitcoin and Ethereum and things of the like, I'm not going to go into everything there, but you have to explain what a cryptocurrency even is, why that cryptocurrency may have some type of value, right? What it does specifically, because all cryptocurrencies do something a little different. Okay. And so you have to say all of these things. You have to give all of this new information. The fact that it is new, the fact that it is different should also mean that it is more complex, that it is more difficult to understand. So I don't buy the premise that the stock market is so difficult to understand relative to cryptocurrency. I would say that the stock market is actually very easy to understand. Now, is it difficult to understand why things move in a way that they do in the stock market? Of course, but it's also difficult to understand why things move the way they do in the crypto market. It's also difficult to learn the accounting language to, understand how to analyze a particular company. I totally understand that. Right? But that doesn't mean that you can't buy index funds or buy ETFs or understand what an index fund or ETF is, that it's just a group of companies and you buy partial ownership in that big group and you don't have to do that fundamental analysis. You don't have to do that big, analysis of the company's revenues and profits and operating income and their debt and their equity. You don't have to do that type of analysis. You can simply say over a long period of time, the S&P 500, which is a group of the country's largest companies, right, has gone up on average about 10% a year, right? So I'm going to invest my money in the largest companies in the United States because I believe in the United States and I believe in our ability to do business. I believe in our ability to innovate. And that's all you have to know. So again, I'm not buying the fact that cryptocurrency is simpler to understand, right? It is newer, it's more enticing, right? But it does not make it just simpler to understand. Now, this same individual, Fontes, says that the same logic applies for lower income investors, right? Their study found that the people it surveyed with incomes lower than $60,000, 35% have traded cryptocurrency, while only 27% have traded stocks. Now, she says that I may not think that I have the ability to enter the stock market and purchase stocks if I'm a single mom and make $40,000 a year. But I may think I can get some cryptocurrency. I don't need a broker to do it, and I don't need a 401k account. Now, the University of Chicago survey also found that overall 13% of Americans bought or traded crypto over the last year compared to 24% who invested in stocks. So this is very, very interesting. Okay, what's very, very interesting here is that 13% of all Americans, right, I'm guessing over some age range, right, bought crypto. But 24% invested in stocks. 24% invested in the stock market. Now, the reasoning for this can be multifold, right? The reasoning for this could be that within 401k accounts, the primary way that individuals are going to build wealth over the long term in the United States, they don't offer Bitcoin, they don't offer Ethereum, they don't offer all these things. And so the primary way that people are investing actually has stocks offered to them or stock mutual funds offered to them, but cryptocurrency is not offered. Not to mention, there's obviously a large group of individuals there who don't invest at all. Okay, if only 13% of Americans bought or traded crypto and 24% invested in stocks, right? There's obviously some overlap between that group who invested in stocks and also traded crypto over that time period. Okay, so there could be no more than 37% of the country that actually tried to invest in something stock or crypto related. All right. Now that number is likely smaller again because of the intersection between the individuals who actually did both. All right. So that's very, very interesting, and it's likely due to the fact that people who invest in retirement accounts and things don't have access to cryptocurrency within those retirement accounts. But this idea that having lower income means that it's easier to buy cryptocurrency is also a fallacy, right? It's also false. Okay, if you are a single mom that only makes $40,000 a year, you may think that you can buy cryptocurrency and you don't need a broker or 401k or whatever, right? But it's just, I've set up both accounts, okay? I've set up accounts for crypto. I've set up accounts for just an IRA or, brokerage accounts or whatever, right? They're both extremely simple. You don't need to go get a broker to open an investment account. That's not necessary, right? Well, all you need to do is you go to Vanguard's website or Fidelity's website, or on an easier scale, you go download the Robinhood app, or you go download Webull or something like that, and you can be buying and selling shares of stock in a very, very quick manner. Okay. Now, the argument that I could see made here is that individual shares of stock may cost a lot more than me being able to put any amount of money into cryptocurrency, and that money just going into buying partial amounts of cryptocurrency. Because obviously, with Bitcoin in the 30,000s now, and it was in the 60,000s, then buying one whole Bitcoin would be crazy. But we buy Satoshis, right? We buy small portions of one whole Bitcoin, okay? And so people may think that they can do that, but that argument also does not hold up, because you can buy partial shares of stock just about anywhere now. Now, some of the traditional brokers, like I know Vanguard, is not going to allow you to do so, especially within their traditional types of accounts. Fidelity probably doesn't allow it either, but I know Charles Schwab does. And then I obviously know that within Webull, within Robinhood, you should be able to buy partial shares of companies. And in being able to do so, it is just as easy to put money into the stock market and purchase stocks than it is to put money into cryptocurrency. Now, again, I think this speaks to multiple things, right? We talk about low-income individuals and cryptocurrency. I think this speaks to multiple things. I think this speaks to the fact that one, a lot of individuals don't have the education about the stock market, and that's fair. And that's fair almost across the board, that a lot of people don't have education about the stock market. But even more, I think that individuals that are in lower income situations, they are trying to maybe not get rich quick, but they're trying to increase their wealth as quickly as possible. And they're willing to take a little more risk, or a lot more risk, in order to do so. And if they see that people are making returns, then they're going to follow. They're going to follow the returns. They're going to follow where they think they can put their money and make it. And if they see that something like Bitcoin just explodes in price by the hundreds and hundreds of percent, then why would they not be interested in putting money there? Okay, the stock market's been around. The stock market will be around, and individual stocks that they could have traded, this past year, they could have also traded, 15 years ago. But they are interested in what's new and what seems to be making people money now. And what seems to be making people money now has been cryptocurrency. And that's not a knock on these individuals. That's just human nature. Human nature is we want to follow the herd. We want to do the things that other people are doing that is successful. We don't want to be doing things that are not going to make us money. We don't want to be putting our money in places where our money's not going to grow fast, right? But we are far more willing to take the risk, and we're far more willing to put our money in places where we understand a little bit less when we don't have that much. And that's really, really wild, because you would think with less money, then we would be in a place where we would want to hold on to more of that money. But it seems that the individuals who do try to invest when they don't have much money, they are trying to grow it really, really quickly. And Bitcoin, they caught on to something that the stock market doesn't catch on to. You have to think Bitcoin really caught on to the social media craze. Okay, the stock market doesn't get that much clout via social media. Okay, but Bitcoin was really getting hyped up, and still gets really, really hyped up via YouTube, via Instagram, via things that you see on Facebook, via all these different social media apps and platforms. Right, you have likely seen something about Bitcoin on every single one of them. So when it seems like everybody around you is making money in this particular thing, then obviously you are going to want to flock to that place where everybody else seems to be making money. But you have to understand that that is not a logical move. It's not a logical move to Bitcoin once it's already had a large run up. You want to buy things that do have a way to be analyzed and do have some reasonable basis for being at the price that they are. But again, lack of education about these things will make you flock to the things that seem to be making people money. And it doesn't seem as risky as a lottery ticket. And it doesn't seem as risky as going and playing the slots at the casino. It seems like there's a little less risk there, and that is really flocked to by lower income individuals as well. So you would think, especially with people staying home, not being able to go to casinos, or maybe not being able to go out and buy lottery tickets, that they were using cryptocurrency like their lottery tickets. So the fact that we're saying that lower income individuals are just more drawn to cryptocurrency, I'm not going to deny that they may be a little drawn to it, but are they drawn to it as an investment vehicle, as a way to grow wealth over the long term, or are they drawn to it as a substitute for something like lottery tickets or the casino. And I'm going to say that a lot of individuals do flock to things like cryptocurrency or even the stock market like we saw this past year because they see it as a quick way to make money. They see it as a get-rich-quick scheme in the same way that they see the lottery or the casino, and they are going to play it as such. Okay, so I don't think it necessarily holds that these lower-income individuals just want cryptocurrency and they just think that cryptocurrency is so easy to come by. Cryptocurrency is just as easy to come by as stocks are to come by. Now, again, if you don't have a 401k account, then you're not going to be in the largest group of individuals who own stocks in the United States. That is 100% true. Okay, but it doesn't mean that you can't have more individuals trading stocks than trading crypto over a particular time period. Now, obviously, cryptocurrencies had a wild year. Bitcoin hit an all-time high above 63,000. And in April, the meme-inspired Dogecoin soared as much as 13,000% in 2021. So again, this speaks to people's want to get rich quick. It speaks to people's want to not traditionally invest and make money really, really, really fast. Okay? This does not speak to the idea of analyzing companies and the idea of slow and steady wins the race and systematically investing and putting money away over a long period of time. It does not speak to that. And that has been the proven way to build wealth over a long period of time. And that's what I'm really trying to get over to you guys today, is that even though an article like this may come out that say women and investors of color seem to prefer cryptocurrency, I think naturally there are holes in this argument that they actually prefer cryptocurrency. I think cryptocurrency was hot. I would say give it some years and see if this continues to persist. But what you really need to understand, if you are a woman or investor of color or not a woman or investor of color, that you need to understand that stocks have been the proven way to make money over the long term. The stock market has been a proven way to build wealth. And guess what? You are going to have to wait. You're going to have to put money in systematically over time and let it build and build and build. And the fact that you may not want to do that does not speak to the stock market's efficacy, and it does not speak to the want to invest in crypto or want to put money in crypto or other, meme stocks or whatever, right? It doesn't speak to that. What it speaks to is your impatience. It speaks to your unwillingness to wait, your unwillingness to go slow and steady, because traditionally, historically, slow and steady has won the race when it comes to investing. And I just want to push you guys towards that place. I want to push you guys toward a place where you do invest in traditional stocks and ETFs, mutual funds, things of the like. Okay, not just because it's traditional. Okay, I'm not just trying to push a traditional mindset. I know the world changes. I understand that, right? But you have to understand that cryptocurrency is not truly investing. It is not truly investing your money. You need to understand that following Reddit is not truly investing, okay? It's not doing your analysis and understanding why you're putting your money where you're putting your money, okay? And you're far more likely to get bit as long as you're putting money into things that you do not understand. You're far more likely to get bit when you are putting money into things that are having short-term runs and not having long-term value that is perceived by the stock market or by the crypto market, right? So I'm not making an argument against cryptocurrency, okay? I'm not making an argument against people who make money with the meme stocks. I'm not, okay? But what I am suggesting is that if you are going to speculate, which is what all this is speculation if you don't understand it. If you don't know what you own, then you are absolutely speculating, okay? What I'm saying about this is that you need to keep your speculation to small portions of your portfolio. You need to understand that not everything you have should be going into speculation, because you're far more likely to look back and be regretful about putting all of your money into these speculative assets than you would be if you put all your money into traditional assets, right? Which are likely to go up in value over a long period of time, which have gone up in value pretty predictably over a long period of time, okay? 10 years, yes, it seems to be a long time. And as our time horizons seem to shorten as investors and speculators, then 10 years seems longer and longer. But I am not going to concede that cryptocurrency is a place that we need to be looking primarily to put our money. I think that cryptocurrency could be a great way to speculate. It could be a great place to put your money in order to have some extra growth somewhere else. But do not expect that money to be there. Don't put any money in it that you aren't willing to lose, right? And the vast majority of what you have should go into the things that have historically worked, like the United States stock market. So don't just be aroused by the short-term returns of different asset classes, and don't just get so excited because things seem to work in the short term. Make sure that they're going to work over the long term for you, or don't put your money there. Or make sure they're going to be a small portion of your portfolio before you ever put your money there. Because the last thing that I want is for everybody to put everything that they have into cryptocurrency and see it crash, and then everybody be out of luck, right? Because again, it is a supply and demand based asset. So be smart about your investing, be logical about your investing, and don't try to move quicker than you need to move. Okay, put money away systematically, do it in things that work, do it in things that have historically worked, and you will be just fine. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching, and you and I can begin working together, pushing towards your long-term financial goals and ultimately pushing you on towards financial freedom. So tune in tomorrow as I continue talking about personal finance topics that I think could be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.